I am here to help you learn the things that I didn't know and I wish I would have known before I invested into Bali. I love investing into Bali. I love the whole idea of having multiple homes around the world. So I would love to have other people in this journey doing the same things and having multiple homes in Bali, around the world, if this floats your boat. And this podcast is there to just help you navigate the Bali opportunity. I think all the developers are dying to know is what is the tax obligation for me as a developer, right? When do I have to pay this tax, and what, like, we covered in detail for the foreign investor and them, but what about the developers? And let's start with when's the first time they pay tax, and when are they supposed to pay tax ongoing? What's their situation?
I think we've covered sort of land taxes and transaction taxes.
Mm-hmm.
One thing that we talk a lot about in Bali is VAT.
Mm-hmm.
And talking about VAT is kind of talking about COVID or some horrible disease nobody wants to pay, which I don't think is fair. And actually, as back home, you can have VAT in and out, and in the end, it's not a substantial add-on, but it's perceived as being, and that kind of leads away from structured companies to less structured, smaller companies and individuals to get into it. In terms of construction, if you appoint a proper licensed construction company, then it'll depend on the type of license. There's like 5 or 6 different licenses, and the tax bracket that you have to pay on the construction, or they should pay, but you as the developer should withhold towards the contractor, can be anything from maybe 1.75 up to 6%. If you do what we call a self-build, then you don't have that tax. There's still a construction tax that the tax office at some stage will collect. But then you're liable for a VAT, which is 10% of real VAT, which then ends up with 2.2%. But I think that in itself is a topic, and maybe those different levels, I can give you a list of it. It depends on 2 different types of licenses that the contractor actually has, from that 1.75 to possible 6%.
A lot of the times developers are using the contractors to just give labor, and then they're purchasing the materials themselves. Under this situation,
so that would be considered then a self-build, and you have the 2.2% VAT tax paid.
So pay the 2.2% on the labor only component that you're taking as
on the overall cost,
or on the overall cost of everything that your product and your and you should self-submit a 2.2%. Like, okay, I spent 3.4 billion on this build, I'll pay 2.2% on this to the tax.
Great.
Right. Okay. And then when you go on and on sell the villa, then you've already paid 2.2%. Is that then later credited, or you just paying?
No. Then when you sell a lease, it's a 10% final income. And if you sell a HDB title, then it's 5% buyer, 2.5% seller on the transaction amount.
Okay. So developers, you pay your 10% on your sale of your land part of when you sell to a foreign investor, right? You have your 10% straight away that you pay. Then, depending on how much the cost of that development was, if you are doing a procurement yourself, but you're only getting procurement of labor, you'll pay 2.2% because you're doing a self-build. If in the case that you give the whole contractor everything and you have a contract deal with them, it will depend on their license as to are they SME or what level they are. And technically they should be the one, because they're licensed, paying the tax because they're collecting income from you.
But compulsory for you to withhold and pay. So
compulsory for you.
It is the contractor tax,
It's their contractors. You should withhold it as a developer and then pay it, because they don't want them to collect it because they may not pay it. And then after you sell the property, right, on to a foreign investor, you are then obligated as well at that time to pay 10% of
Final income, yeah.
But is that reduced to 0.5% the last 3 years for them?
No, so if you have, let's say you have a company and you're selling a villa, and let's say that's 5 billion, it cost you 3 billion to build, you will still get taxed on the 5 billion, 10%, so that's 500 million. You shouldn't have any other taxes in the PMA for that, so it gets consolidated. That's the final income. You may have other expenses,
yes,
incomes and so on in the company, but that's a final tax, so that shouldn't come into the consolidation again in the P&L of the actual company. It does, but it's a final prepaid tax.
Got it. So what about the 0.5% that everyone's been saying that they can get for the first 3 years?
So that would be on the rest of activity that you've had in the company, not that particular sale.
Okay, the sale should garner also 10% at the construction level. Because there's two revenue streams. One is you on-sold the land and you have to pay 10%. And then there's also the construction deal and you're saying 10% on that as well.
So the construction tax that we talked about, the self-built or the levels of it is one tax.
Yes.
When you then sell on a tax or a property, you have a 10% final income tax. Mm-hmm. You will then again have a dividend tax when you take money out, but it is consolidated into the P&L as a final tax for the corporation.
That's when the 0.5%.
It's not really relevant. It'll be on other aspects and activities of the company, but then you will have the dividend tax, which is 10% when you are a tax resident to Indonesia, or 20% withhold, which normally ends up with 15 if you're a tax resident abroad.
How does this 0.5% every developer thinks that is working for them? How are they applying this?
It used to work, and maybe in some cases it still does, but
so they avoid the 10 and then they do the 0.5.
Well, they look at the corporate. They still have to pay that 10% tax regardless, but it's like the corporate tax that is then 11%, not 0.5, or whether they have the 0.5, then you don't have the 11%, but a final sale of a villa will still have that 10% compulsory aspects. And the 0.5 will be relevant to the rest of the activity. So there's a lot of confusion around
there is a lot of confusion
and configuration of it. And I think the aspect that anyone buying, selling, investing in Bali should be aware of, like if you operate in Jakarta, it takes 6 months before the tax office will pick up on whatever aspects they may see. In Bali, it takes a lot longer, maybe 2 to 3 years. So if you're here for 2 years, good luck, leave. Yeah. But if you're here for the long term, it'll catch up with you.
Okay, so they will audit your accounts. So what if you're holding like multidisciplinary, like USD, Euro, and all this? How are they picking up that because you haven't converted it into your IDR account?
So with the new core tax system, it's an AI-driven tax system, and it really works. We've seen this, being tested. We've seen this towards accounts that are closed off, and it still finds discrepancies. So forward, I would recommend to people to be really careful because it speeds up and identify very quickly where the errors are. And with that, the Indonesian government has full authority to look at your accounts. And it doesn't matter if it's a dollar or rupiah account. If they are investigating you, they can request the bank to submit that. The bank will traditionally be in favor of you and maybe start with the rupiah account. But if they also ask for the US dollar and whatever else, they can find out.
Because the banks also don't allow you to go back more than 6 months without you going up to them and saying, I need all my accounts here.
It's compulsory for them to keep it.
Yes.
But you will have to go to the bank and actually request for them and maybe pay a little bit to get printed out all your account details. Yeah.
Okay, so the developers actually, when they are doing these sales, they really need to be aware that they should be marking up that price, not just by the 5% for their tax agents, but also the 10% that will come off as well of that sales price at a whole level.
I think that's what we see a lot out in the market, where people promise, I think I've seen the highest 42% ROI, down to 15, 20, 25. Make sure that is in a format that you can then verify as in all the costs are calculated in a good way. Taxes is calculated in a good way. And then I guess you have some kind of audit or access to figures to verify that the $200, $400, whatever it is that they're saying you're going to get is actually something that happens in the market or not. So it's not just a story. Again, like Australia, Norway, you get arrested if you promise something that doesn't have I don't think I've seen developers who actually assess ROIs. They just sell you a property and you figure that out yourself because it's illegal to, do that. But in here you still get away with it. But I think you need to be.
When did the developer need to pay the tax, given it's sometimes staged with the off plan happening, and they're kind of funding it and they're not, they get to the end kind of thing?
It should be ongoing, so money received and spent into construction, the taxes are actually due then. Tax office sometimes close their eyes on that because they don't want to get into it, and they accept it that they've received it towards the end and they don't make a further issue out of it, but it is an ongoing monthly report aspect.
A lot of developers have lost money from the contractor, that end up screwing them, so they actually be in a loss position sometimes, in their first couple of developments. So how about the treatment of things like that, where they've invested the money and then they have lost money because they've had to change contractors, which happen regularly? It seems like everything's at the revenue level, but what if there's a loss in the company?
Yeah, so if you can justify a loss, then obviously your corporate tax should be zero because you've lost more than you've actually gained. To sort of consolidate and prove that to the tax office, again, that needs to be well documented. It needs to be approved and certified contractors and so on. But if you have had a loss, that should be possible to book, as long as it's done in a structured, proper way.
Yeah, if you've got legal court cases showing that it's been agreed that they're meant to pay you back or whatever. But because in Australia, where I'm from, it's you have to show profit at the end. If you're getting taxed at the revenue but you have no money to pay the tax, because when you receive the revenue but then you went into a loss position, you usually don't have the money to pay. That's what I was wondering, is in Indonesia, how is the treatment? Because you're saying every time you do a sale, you're at a revenue level, but you might not be making any money.
You've sold the property, but because you've changed contractors.
Or one ran away or whatever happened.
Government tax authorities in this case, I don't think would care about that from the sale of the value, because that's how the regulation is. But to consolidate that into a loss in your company that then can be written off later on is possible.
Okay, so the tax that you paid can be
credited,
that can credited from the loss of what's due. It can offset each other.
Correct.
From a revenue to the profit location. Okay, very technical. If as a developer I've bought under my personal name the land, or I've sold as a company, what kind of tax outcomes do I have when I sell if I did it under my individual versus my company? Is there any
I think
differences?
The reason for why many choose to keep the land and the property in their private name, or at least the land, is because if you then have a kitas and you sell something privately, the 10% is a final tax. But that leads to the aspect of what we just talked about, that forward it looks like the government will say no to that. Any commercial activity will need to be in a company. And for when that takes effect to be enforced, I don't know, but ongoing.
Got it. Okay, thank you so much for clarifying for the developers their amounts of taxes. We're from a land tax to what you sell at 10%, and then at the end you consolidate at your company level as well. But there is a prepaid tax on this is the sell amount you did, so it's kind of quite clear as to what they have.